So, since I'm in the business of stealing movie lines lately here, Tyler Crow, and now for something completely different, you and I are going to talk about Estee Lauder. You don't hear us talking a lot about companies that are in fashion or in cosmetics or in retail that much, but we do have some fun taking a look at things that maybe aren't as closely followed by the average stock investor. And Estee Lauder is definitely a really interesting one right now, Tyler. Right, the stock is down a ton. A lot of people view this as a growth stock. A lot of people think about Estee Lauder as maybe a bellwether company because a lot of these kinds of products, they tend to hold up pretty well during different economic conditions. But there's some things that are going on that are affecting Estee Lauder that, Tyler, you think people maybe should know about. Are you ready to have this conversation? You got your lipstick on, Tyler?
I was going to say everyone watching this video already knows, just at your hair alone, not much about Estee Lauder.
That's unfair. That's unfair. I'm very familiar with good beauty care products. They just don't care for me, but that's another story. All right, I'm Jason Hall. This is The Smattering. Tyler, let's get to it. But first, just a reminder, The Motley Fool sponsors our videos. If you're looking for even more great stock ideas, please go to our special link, fool.com/The Smattering. And The Motley Fool is going to give you its 10 best stocks to buy right now. Please check that out before you leave this video. All right, Tyler, let's do this first because there might be some people that saw your name on the byline for this and said, okay, he's going to talk about some industrial manufacturing, weird supplier somewhere. And instead, we're talking about Estee Lauder. What is Estee Lauder, and what would you say to the thesis for owning it right now?
Sure. So, Estee Lauder, one of the largest brand owners of beauty, skincare, perfume, fragrances, does a lot of like private manufacturing. But some of the biggest, aside from their namesake, Estee Lauder, are a lot of products they have. Aveda, Clinique, Bobbi Brown also started. Joe Malone also does, like you said, contract fragrances for companies that may be like fashion designers. I think they do Tom Ford and stuff like that. So they'll do that. And
Private label.
then
Yeah.
private label stuff, and then is constantly in the business of acquiring new ones because there's always new fashion designs, new perfumeries, new makeup companies coming to market.
So you think about other
I
companies like LVMH and that sort of thing that are like a house of brands. This is the house of brands in cosmetics, beauty, and skincare.
Yeah, one of certainly.
Yeah.
Again, doesn't exactly sound like something that I would be particularly interested in, but
Maybe it's
historically,
been a compounder.
well,
It's been a wealth creating machine for a very long time.
exactly. Also, my wife was a manager at Aveda for a while. She cannot stop buying their products, so all I do is stare at Aveda bottles all the time. And I went, God, who owns this company? Something's got to work here. That was point number one. And then here's point number two. And this is actually something that I think is really smart about their strategy and something that's been what's worked for them so well is, I live overseas. I have spent a lot of time in international airports. And one of the most prominent things that you see in international airports is the duty-free section that is full of skincare and perfumes, and most of us
Booze,
go
perfume, and makeup, right? Those are the things you see
ex
there.
exactly. And when, I think a lot of us just in general would look at that and go, who the heck buys skincare and perfumes and all that thing in the duty free in the airport? I'm going to tell you this right now. There is no better way to touch the upper middle class of the entire world. The United States, the rest of North America, South America, Africa, every upper middle class citizen in the world goes on international travel. And because of that, if you can have access to like sales in international airports, you're going to have a touch point with the global upper middle class like no other bricks and mortar strategy can give you.
It's
So
actually a
it
really
is
effective targeted marketing product.
yeah. And
Yeah.
so you combine those two things for me, and I said, this is brilliant. Like this is the kind of things that when I think about wanting businesses to do, that's why I got involved with it and I started looking into it. And then you see this company that's been an absolute wealth compounder for a very long time, very good at acquiring brands, very good at nurturing them, bringing them into their house, spreading distribution, and using these sort of strategies to get the name out from what was probably like a niche One, like I think Le Labo is one of the ones that they really started up in New York and now all of a sudden has total exposure across basically international borders. So that right there encapsulates why you would want to be in this business. High returns for years. It was a more than 30% return on equity. And as a result, you had all these things. And it just looked incredibly durable, right? I think we've all heard of the lipstick effect. It's this like this economic thing that even in recessions, people will buy small luxury items like fancy lipstick as like a treat to oneself. So you compile all of these things together and you look at it and you go, this looks like a great business. This is something I want to pay up for. And that's what has happened with Estee Lauder. And this is a
Right.
company that 10 years ago was trading for about 20 times earnings. And then in 2019, 2020, we were starting to approach 75 times earnings for this company because people bought into this thesis and kind of the idea of, well, you pay up for quality, right? Quality earnings, durable, competitive moats, all of those things that you would proclaim them having. They had it. You pay a premium for that. Well, it was such a
I'm
premium.
gonna pull up a chart and kind of highlight that, right? And you'll see some volatility. Like you see the spike right here. This was during the pandemic, right? So again, adjusting for that kind of that madness when all the stocks fell sharply, right? And again, you look at it and you go back 2014, 2015, this is exactly what you're talking about. This was a stock that, again, it was a growth stock. You're still going to pay that 20 times earnings. And then it has just substantially started to come up. And now you see it's at 50 plus times earnings. Let's talk about another part of the thesis that's been affected. And this is, I want to say maybe this is a little bit of the warning that investors need to think about right now. And that's a big part of their growth thesis. You talked about being in those international airports. That's a great way to be in front of the global middle class, upper middle class, and upper class. And this is a company that hitched its wagon. I don't want to say, but they've made China, maybe to a certain extent, the tent pole of their international growth strategy.
Yeah, obviously, Chinese market has been a huge growth driver for them in terms of skincare. They even mentioned in a far off, I think it was a 2022 investor presentation. They don't give them out often, so you got to go digging for them. They said China is our number one growth engine, bar none. And so hitching your wagon to the Chinese economy for a very long time worked. But with zero COVID policy shutting down a lot of Chinese consumer activity and
Here's
the
exactly how that's played off. So again, you see this pretty consistent, steady revenue, really high rate of revenue growth. And some of that's organic growth, but some of it too is those acquisitions of other brands that it's made. But again, this is 2020. This is the world shutting down, right? And then the world starting to open back up. And then again, this is largely, very much largely, China locking down last year and then just beginning to reopen recently, where revenue is starting to return back to growth. So Tyler, so that's the background. What's How is this a concern for you, and what are your prospects, do you think, going forward?
So two things. Number one, Chinese growth is very potentially not going to be as robust as it's been. I know you did a nice long podcast a while ago with a good friend of ours, Bill Mann, talking about investing in China, how it's becoming much more challenging than it was a long time ago.
I want to
And
summarize that really quickly. I think it's super important. China's middle class is huge. It's roughly a half a billion people, and it's expected to continue to grow. But China's demographics are a mess right now. The result of the one child policy for multiple decades, China's getting very, very old. They have massive unemployment in their 25 and under. It's 25% or more, depending on what number you can trust out there. A lot of their economic growth has been spent on infrastructure that's just, they built stuff and it's just sitting there.
roads to nowhere.
Right. So not even roads to nowhere, roads to towns that no one lives in. So all of that spending and their ability to recapture and return to those levels of economic growth are very, very questionable. And that's a potential challenge for every company that does business in China, but could have significant implications for an Estee Lauder if we see that middle class struggling to continue to expand and continue to have traction with those brands that have proven pretty popular with international consumers.
Yeah, obviously, the strategic pivot is probably to start looking to other markets, and there is large middle class growth elsewhere in the world, but China is not going to be the major driver of that likely in the next 15 to 20 years. And there's just a conversation about valuation, right? When something like Estee Lauder is highly valued, and then all of a sudden the business itself doesn't live up to those lofty valuations, a stock is going to get whacked. You see it all the time in this sort of business. And I think there's going to be a lot of people who are going to read things otherwise automatically, computer generated articles and things like that of Estee Lauder's undervalued now. But a lot of those are based on historical valuations. Like over the past 5 years, it was valued much more, so it's undervalued today. And basing your investment thesis on historical valuations when the underlying conditions for those valuations have changed is a recipe for disaster.